Okay. We're going to get started here in a minute. Hey, folks, a little bit of technical issues tonight. We'll wait for some of the other members to join in from the other link, and we will begin. Let's move this over here. Good. We have a few people on already. Good. Sorry about that, folks. It's the strangest thing. When I need to leave myself more time to swap over to the members. Hey, Richard. Good to see you. Sorry about that. We'll give it a couple of seconds, letting people join in. The dollar is really tanking. Picking up speed. So much for Hong Kong. While we're waiting, I'm just going to go back to the headlines, see if anything new popped up. Nothing big here. This is typical. Morgan Stanley says global growth should recover in 2020 as trade tensions and monetary policy ease. Monetary policy, yes. Trade tensions, they're not going anywhere. Okay. Hey, Barun. Thank you, Richard. Appreciate that very much. Thank you. It means a lot to me. Okay. So, as is typical with these, with the private member inner circle sessions, I like to open it up for conversation. What is it that you folks have on your mind? Symbols that you want me to go over. This time is yours. Anything that you want to talk about, we could certainly do so. Whether they be stocks that you're watching, stocks that we've been talking about, economic concerns. If I can answer them, I could certainly give it a shot. So we'll go to UGAZ. I think Patrick had asked about that earlier, and we'll take a look at UGAZ. Patrick, are you on yet? SPY? We'll go with Richard first. We'll wait for Patrick to join in. Hopefully he joins in, and then we'll go over UGAZ. So we'll kick it off. SPY. Let's go with stock charts here, because I have a lot more work that's been done on these charts. All right, so we're going into the new, or the back half of the month now, with only a few trading days left to go. So what I like to do is I like to begin looking at the monthly charts to identify upside price targets, downside price targets. And I think that we could still head higher up to minimum 3,200, probably up to 3,300 on a monthly basis, unless, of course, something derails the market. Now, obviously, I have a lot of concerns, whether they be geopolitical, whether they be monetary, a bank that goes under. I don't know what the Federal Reserve is doing with all this repo stuff. Are they bailing out a bank? Is there another bank set to follow? I don't know. So on any given day, we need to be able to wake up and expect that the headline news may not be good. But absent that, as we know the markets right now, it appears as though that the path of least resistance remains to the upside. There's no reason to doubt otherwise that this coming week, in all probability, we're going to make new weekly highs. Now, what I will say here on a monthly chart of the S&P 500, that volume, and we've talked about this a lot lately, volume on a monthly basis is fairly low. Could that change? Sure. But let's face it. Today's the 17th. We have 10 trading days left to go. Half the month is, a little bit more than half the month is in the books. And we have very, very light volume this month. So that's a concern. There's no doubt about that. That's a concern. What this is implying to us is that we don't have the institutional demand that we need to keep this market moving up higher. Can they continue to limp it up on trade tension, trade news talks, trade deal talks? Sure. Weekly chart. Here is our megaphone formation, higher highs and lower lows. But right now, we don't care about that formation because it's in the rearview mirror until such time as we pull back and break down below the lower band of support. Let's go to a 5-year view. We have a breakout. We haven't pulled back to do a retest. Volume last week was very, very low. We broke out an ultimate oscillator. So price action looks outstanding. We have not really an outside reversal day, a week, but close to it. And it's a bullish key reversal bar. They tried to take the market down last week. They failed. So the question then becomes, do we now put in a new weekly high this coming week? And that's what I'll be looking for. That's the first thing I think about. Even on Sunday Night Futures Live, I'm looking for a new weekly high on the charts. Hey, Anthony. What do you think about the case that we started a new bull market? Yeah. You can have... We are in a secular bull market, and within a secular bear market or a bull market, you can have secular bear markets within this context of a secular bull market. I think that we took a pause for 18 months in this secular bull market. Now we're breaking out to a new bull market. Yes, I do think that we are in a new bull market. But you need to go back and really pull back and take a look at a quarterly chart of the S&P 500. And it's the same chart that began back here in 2009, the beginning of the secular bull market. We've had bear markets within it, but now we have a resumption of a new bull market. So, yeah, I think it's a new bull market. Daily chart, S&P 500. Oops, wrong chart. All right, so Friday, beautiful breakout day. You bet, Amp. A nice breakout day on Friday. RSI, we're probably going higher here. The futures are down right now. Volume rose on Friday to about average. Stokes look good. A little bit long in the tooth here on the Stokes. Now, I want to bring up the Bollingers because I'm concerned about where we're at. We have room to go here. So the S&P 500, the spiders, looks good going into the new trading week. I would stay long here. Barun, can you elaborate, please, on how you drew those lines? On the S&P 500, Barun, at weekly or what? I'll go back to the chart and talk about it. Weekly or monthly? Or daily? I don't think I did daily lines. No, I didn't. You talking about these here? Probably. So what I like to do is extrapolate out. It's basically what TrendSpider does. It extrapolates out but they do it automated, obviously. I do it manually on stockcharts.com, but that's what attracted me to TrendSpider, is that they do it automatically. So in this case here, what was early on or midway in the bull market, what was the rising lower band of support, that ended here in October of 2018 when we broke it. So what was the rising lower band of support then becomes the upper band of the rising upper band of resistance. So I extrapolate out that prior lower band of support, and that just simply becomes resistance. Now, this prior bottom found in December of 2018, that's my first data point. Then after we corrected here in May into June and we began to rally, so I had a new data point from which I could draw a second data point that creates the lower band of support. So I know that if we break this lower band of support, this market's in a great deal of trouble. And I personally believe that we're already on borrowed time. We've already broken the support level. Now we're rallying yet up again. We'll probably retest it, but this is what blow off tops look like. And just when you think the market can't go any higher, it does. It's crazy. I've been through two of these already, and I'm going to be the last guy to say it's time to go cashing in your chips and getting short of this market, because I tried it. I tried it back in 2007. I was early, which, unless of course you have a lot of liquidity, you're wrong. So I didn't do it in 2000. I didn't predict that. I'm not going to claim I did. The dot-com bust, I did not predict. The financial crisis, I knew was coming, as sure as God made green little apples. But I was early, but we did make a ton of money on that short. So that's one I did call, but I learned my lesson from the 2000 bust. All right, so I kind of went over it, Barun, and hopefully I answered your question. Did I answer it satisfactorily, or do you have another one? So basically all I'm doing is taking a look at historical support levels, watching when they break, and then extrapolating out, because I make the presumption that those are going to be my upper bands of resistance. It's not me that makes it up. It's just the way it works. It's just the way the computers read it. It's the way technicians read it, and I just follow their lead. It's simple as that. You're welcome. Did Patrick join in? Hopefully he did. I'll start on UGAZ. Okay, I'll go anyway. He can catch it on the replay if he didn't join us. Let's bring up UGAZ. We'll do the same deal. We'll do the higher level view, then do a drill down on UGAZ. So the first thing that jumps out at me are these Stokes are just so flatlined and begging to hook up, just as they did back here. And you saw what happened the last time that occurred. I mean, what a move on nat gas. Incredible. So now we find ourselves not even a year later, actually about a year later, and we are well below prior lows, and we are flashing topping tails. I mean, last month was a good month. We had a bullish reversal month. This month we were higher. We've been rejected. So what we need to do is respect the signal by the market and say, okay, the market has told us that there are plenty of buyers or sellers up here that want to get made whole. The question is, how many sellers are there, right? I don't think there's a ton. Okay, so here's our lower band of support. Now, from a monthly perspective, the way I would trade this, ideally, this is a perfect world, right? Perfect world. Somebody just asked me, hey, Bob, take a look at UGAZ. I pull up the monthly chart because that's where I like to begin, monthly, weekly chart. And I'm seeing that we are trading right at the lower band of support. Yeah, that's a great deal because I know that we'll probably rally. We're not there yet. I don't have that situation. Last month I had that situation. This month I do not. We're in the middle of a trading range. So I like to look at this chart here, monthly chart. We're in no man's land, right? So to get a shorter term swing trade, I need to drill down a bit more. But before I do that, let's see if we have any other signals by the market. Ultimate oscillator putting in higher lows. Volume is very good on a monthly basis, assuming that we close positive on the month. Let's drill down. Weekly view. All right, so we're seeing some firming up here. A lot of volume last week, but let's take our crayon out. And let's draw some lines. Technically, what we could do is this, really. All right. So on a weekly basis, we have a nice setup here. So what we're doing, we'll start with the indicators first, and then we'll talk about price. So we are putting in higher lows on RSI, same deal here on the stochastics. That's great stuff. That's exactly what you want to see. I would be more enthusiastic about UGAZ were the Stokes trading up above the 50 level, but you'll probably have the fast line above 50 this week. So the beginning of a real recovery on Stokes, the momentum indicators is beginning. You'll probably see a pop higher on RSI, which is building the right side of a base. Now, why do I make the presumption that we're going to see a continuation move higher on the momentum indicators? The reason is that we broke out the week of the 4th of November. Last week we dropped back. We did a retest. I talk about this all the time. And I love retests. A lot of traders, newbies out there, they don't appreciate the value of the retest. They just don't understand it yet. It's so foreign that a stock breaks out and it pulls back, and they don't understand that a retest is a good thing. They don't understand that traders are OCD. They need to touch that what was resistance is now support. They need to see it hold. So we were down last week, no doubt about it, but it was a bullish week. Why? It was a bullish week because we held the breakout point. Now, if we break down to a new weekly low, we avoid like the plague because that would be a breakout point failure or a bull trap. But at current, we closed the week out above the upper band of what was resistance is now support. Volume was very high. But remember, we rallied off the lows of the week. So now what I want to do is I want to take a look at daily volume and perhaps even drill down and take a look at intraday volume to see if we had any big up volume spikes into the back half of the week, because that would imply that you had some stealth accumulation on the part of traders. So let's do a deeper dive here. Put my Sherlock Holmes cap on. I don't like the daily Stokes. You know I hate them down below the 50 level. Ticks me off. Here's the good volume bars. We saw to the upside last week, some volume bars to the downside as well. So automatically, from a daily perspective, I'm reluctant to go buying the shares because what have we learned over the course of time? Is that when you have Stokes down below the 50 level, rallies tend to fade, right? So we have this going on here. So what we need to see here is for a trade, is a breakout on a daily basis above this upper band of resistance. I think Patrick was saying earlier, and I wish he was here. I should have gone over it with him earlier. UGAZ down below 15 is a good price. It would be a good price. I don't know whether or not it's going to get there. It could. I mean, we saw some topping action on Friday. It could. Nothing's out of the realm of possibility, especially with the Stokes declining. And if that occurs, where I would look to be buying is right at the 14, let's call it 1460 level on UGAZ. I would scratch the itch there, meaning I would just open up a small opening position. Then as we begin to break out above this upper band of resistance, add more. Then as we recapture support levels, depending upon how aggressive you want to be, buy on a close above those resistance levels. Let's take a look at nat gas at current. In the futures, I remember last Sunday they were tanking. Here it is. Yeah, they're down now. So we did a reversal bar. This is a 30-minute chart. I don't want a 30-minute chart. All right, so we're down on the session. We were flashing a reversal bar earlier. We've given that up. We're in a tight trading range here. I think that seeing UGAZ down with a 14 handle, that would be a good entry point because that probably means that we're retesting this lower band of support here. I would watch the nat gas futures, and if we break this 2.60 level, I would avoid UGAZ like the plague. Let's drill down on, I want to check out the volume bars on let's go to a 2-hour chart. Yeah, there's not much going on here. You had a big sell-off, a rally back, like a dead cat bounce. I see no reason to go chasing UGAZ. Either we break out or we get to pull back to the 1460 level. One of the two. And remember again that the daily Stokes are down below the 50 level. And remember, it was only a couple of weeks ago where we got burned for a week or two on the dollar when it rallied with Stokes down below the 50 level. And look at how that rally faded now. Well, I'll go to that chart in a moment just to illustrate the value of using the Stokes. So remember this. These Stokes are down below 50 and declining. Rallies tend to fade. Let's bring up the dollar just to revisit the dollar and the Stokes. We'll go to the UUP. I'll just use the cash figure. All right, we'll go to weekly USD. This is the Dixie. So here was the rally. Now it appears as though we're going to roll over. Beware the Stokes down below the 50 level. I bet you we pull back to 97.50 on the Dixie. The UUP, same deal here. Beware the Stokes, folks. We may have a double top here on the dollar. But again, this Hong Kong issue could put a bid in the short term under the dollar, but it'll also put a bid under gold. Any other questions? Any symbols you want me to go over? I want to check out gold before we shut down. I'll wait for your replies. All right, so it looks like we pulled back a little. Oh, we're looking to break out here. 4-hour chart. We have resistance up here. Watch for a rally above. Watch for a rally and a close on a 4-hour basis, 1470 on spot gold. Because I'll bet you, if we close above that level, pull back, do a retest, we'll rally up to 1475 in the blink of an eye. So gold, it's pulled back off that session highs. It's early yet, thin trade. Asia just opened up, or is opening up in a little while. This will pick up in a short bit. But watch for a breakout on gold. 1470 is the number that we're looking at going into the new trading week. And if there's nothing else, folks, I'm going to sign off. Thanks for joining in. Sorry about the technical issues earlier. I'll find a workaround on it, and we'll get it straightened out. Everybody have a really great night. If you have any questions, shoot me an email, and I'll talk to you soon. Be well.